If you're watching this and the year is almost over, you still have time to save thousands of dollars, but only if you act before December 31st. Today, I'm going to walk you through a simple, bulletproof, and useful checklist to walk you through what you need to do before December 31st so that you can make sure that you get all your deductions, so that you make sure you walk through all the steps that you need to do so that you don't overpay taxes. The number one rule that we do here at Upfront CPA is to educate our clients, is to give you the information so that you don't show up to do your taxes when it's late, when you're just now talking with your accountant to do some kind of miracle or to do some shortcut that may get you audited. So today, this is the goal. I'm gonna give you a checklist of each item that you need to go through. It's gonna be a simple, straight through checklist that I feel like it's really gonna help you. This is something that I walk through with all my clients during our year-end meeting. And the goal here is to make sure that you're following all the steps to make sure that you do this, right? That you do this right, that you do what you need to do so that you don't overpay taxes. So, hi everyone, my name is Julian Gonzalez, or Julian, however you want to say it. And I've been in this business for over 15 years, and I'm a CPA here in the state of Florida. And my number one goal is to be a proactive person that is here for you, that is here to help you get there so that you don't overpay taxes. That's my number one goal, okay? So part of that is make sure that you do it in the right time. Because the deductions part of what we do here is we get you through a process that it comes with timing. Because as I said earlier, if you show up in February, in March, in April, that's really when the filing is due, but that's not really when the strategies need to get prepared. So as I said, this is gonna be a checklist. I'm gonna have it here on the subscription. I'm gonna have it if you subscribe to our channel. If you follow us, please give us a like at the end of the video so you can get more content like this. But I'm gonna have a surprise. If you comment in the video and you put checklist, we'll be able to, and you provide us your email, we'll be able to send you that. We'll be able to send you the checklist to make sure you have it so that you follow this with us. Okay. So let's get started with the checklist. So number one is clean up your books. Okay. So number one, let's get those books clean. Okay. So what does that mean? What does it mean? You probably heard this a lot. If you're working with your accountant, that's one of the principal conversations that you're gonna have, right? Are my books up to date? Are my books clean, right? So the truth is, if your bookkeeping is not up to date, if your books are not ready, you're not really doing any planning. At that point, you're just guessing, right? I can't tell you how many times I've had a situation where a client of mine says that they have a pretty good idea where they are in terms of their bookings, in terms of their books. And then once you actually go through the cleaning process of their books, everything is upside down. They had expenses that they didn't remember. They had some changing situations that they did not plan for. And then it ends up costing them a lot of money because they did not go through the books, all right? So what is cleaning your books? What does that entail? So these are the items you want to do. First of all, reconcile all your bank accounts, right? So that is just going through your bank statement. If you use QuickBooks, you can have a simple bank reconciliation so that you can categorize all your expenses. Okay, reconcile your credit cards, very important. Just because you're paying the credit card to pay off the balance, that doesn't mean that you're reconciling. You're only paying the balance of your credit card. That's not even a real expense, right? So you actually have to get your credit card expenses as part of your reconciliation. Verify how you're paying yourself, right? Is it a draw? Is it are you paying through payroll? So all of these things you kind of need to work through. And obviously as part of that is reconcile all your expenses, right? Make sure you're categorizing everything correctly. If you have assets that are not supposed to be expensed, that are supposed to be depreciated. So all of these things you need to look at, right? And as part of that, can't tell you again, just how many clients have come through me that said, well, I estimate to make about $40,000 a year. And prior to doing all this book cleaning. And then once you get through it, it's more like 120,000. That's a real life example that actually happened this week. So what does that do? Why is that a problem? So the problem with that is, luckily this is a client of mine that we were able to identify this at the perfect timing, because it's not the same strategy if your net income is 40,000, if your net income is 120,000. It's two completely different strategies. So if you don't have the right information, if you don't work with the right numbers, you're not gonna make the right decision. Okay, so clean books, clean strategy. Remember that. Okay, so now item number 2. Review your year-to-date income. So do your profit and loss, please. Make sure that profit and loss is, first you get through your bank reconciliation, you categorize your expenses, get that profit and loss clean. Make it look beautiful. The more that you have that organized, the better that it looks. The most categorized, simple way that you can set up your books, the more this is going to help you. The goal here is not to just go through the grind of creating a profit and loss. Here the goal is so that you can actually look at a statement and say, oh, okay, this is my income, these are my expenses, this is my bottom line. Like, this is what I've done, this is what it's taking me to get there. What do I need to do next? What am I looking in taxes? That's the goal here, right? So here at Upfront CPA, once we go through this process of the profit and loss, that's when we do some work, right? Some homework, which is we go through the estimated tax payments, we go through the potential taxes at the end of the year. We go through the payroll analysis versus distribution. So this is a moment where you're looking at your statements, you're analyzing everything, and it's time for action. Okay, this is kind of like where it's gonna get you to the promised land that you wanna get to, which is the one time where you're gonna file taxes and you feel good about it. Okay, and how do you feel good about it? Obviously, part of that is, number 1, not overpaying taxes, right? Who likes to overpay taxes? And number 2 is not a stressful situation where you're just kind of grinding out with your CPA, asking for documentations on the last minute, rushing through, then even possibly going through a preparer who's going to make up expenses that you don't have just because you want to meet the deadline. So very important, have that profit and loss ready, because most businesses don't have a tax problem. In my experiences, most businesses, what they have is a visibility problem. They don't know what they're looking at. Okay. Checklist item number 3, final estimated payments preparation. Okay, this is quite important. This is something that not all accountants and CPA go through. Okay, so what does this mean? Okay, so when you actually file your taxes, that's your last opportunity to pay estimated taxes for the last quarter. Okay, but there's a timing component there. Okay, you have to be strict on, remember that taxes are due on a quarterly basis. When you file taxes, that's not when taxes are due. That's when you file taxes, but you're supposed to have paid throughout the quarter. Okay, so the last payment is actually due on January 15th. So that's when your final estimated payment is due. So you gotta make sure, if you want to avoid penalties, if you want to avoid interest, make sure that you walk through it with your accountant. Right now is the right time to do it. Before December 31st, then you may have just a few weeks, just a few days to kind of get through the last couple of days, but make sure you have that ready so you can start planning. Okay, so one of the things, what do I have to do, right? What do I do to get there? How do I know what I have to pay? So, just go through the profit and loss. It'll give you like a good estimate. Make sure all your expenses are true. Make sure you got your depreciation right. Okay. And your question is, do I need to make adjustments to the final payment? Am I underpaid throughout the year? Can you reduce penalties? And more important is, am I following the previous year's the rules that I need to make sure that I'm paying the right estimate? Because that's the other thing, right? This year you just pay an estimate. It's just an estimated amount, right? So you gotta go through what is called the safe harbor rule. What is the safe harbor rule? is the code by the IRS, which tells you how much you're supposed to pay in estimates. And if you don't follow that rule correctly, you're gonna get hit with a penalty. If you don't know, because all these penalties can be hidden. If you're not working closely with your CPA, or if you're not looking at all your forms in all the details, you may not be realizing that you have been paying penalties. And let me tell you the truth, man, those add up. I've had clients who, they think, oh, why are you doing this? I've never done this before. I don't know why we're doing this. I gave them a list of all the prior taxes, and in one example, they almost paid $10,000 in penalties because they weren't informed about this. Okay, so make sure you go through all the estimates that you do it correctly. Okay, avoid those penalties. Okay, so item number 4 on our checklist. So we're gonna go through our year-end deduction strategies. Right now is when we're putting all that beautiful picture together. Now we have all that information. Now we're just gonna start making some of that magic happen. Right? This is where the value that we as CPAs are supposed to provide for you. If your CPA is not proactive, if you're not working with them, if this is the part of our work where we provide that value to you. Right, where this is where the sauce is being made, and now the final part of the meal is being created. Okay, so there's some major categories here that we're gonna go through. Right, so number 1 is business purchases. Right, so this is the one I'm sure that you've heard this from all kinds of all the information that's out there, right? Is your equipment, is your vehicles, all of these things that are being advertised. Okay, so some of these are true. There is some opportunities there to buy equipment, to buy a vehicle that can actually save you money, but you have to do it the right way. Okay, so that's number 1. Make sure that you purchase equipment and the tools you need, and then we go through that whole depreciation, right? And this is what the value is, right? Because depreciation is that non-cash expense that if you're not using it, you're really missing out. And if you're a business and you're not involved in the depreciation, or at least you don't know if it's being made, this is something that you may need to kind of get informed and at least make sure that it's being done in somehow, some way. Because I can't tell you how much you'll be missing out if that depreciation is not being used for your benefit. Okay, so what example? What is depreciation? So just simple list: computers, software, office equipment, machinery, and the biggest one, vehicle. Right? And there's the 6,000 pound rule, which technically that is true. If you kind of go through that hurdle of the 6,000 pounds, then you can get even more deductions. Okay, because the whole reasoning behind that is anything less than 6,000 pounds is considered more of a luxury. It's not a business type of vehicle, and therefore not taken as a full deduction. Okay, so very important, the equipment, and this is where having that clean profit and loss comes into play, because then you know what you're working with. Okay, so now you can make that informed decision. Next one is the retirement contributions. Okay, so this is where this is the one that it's, when I talk through with my clients, I kind of get those looks a lot, right? Like they just seem uninterested with retirement accounts. So retirement accounts are those that are just those long-term benefits that you don't have that sort of, sure thing that sometimes you're looking for, right? And it's totally understandable. Sometimes as a business, you're struggling to find capital. You're looking to invest your company. You're looking to make investments, and you need cash, right? So, when it comes to making a decision between doing those business decisions that are investments, versus, putting some money for retirement, obviously, doing the business decision sounds like more lucrative, or sounds like it's something that makes more sense at the time, rather than something that is just going to pay off some money down the road, right? So I get that, but retirement can be a very, very useful tool, especially knowing how much income we're working with, right? Sometimes, I mean, if you exhausted all your machinery or all your equipment, which I talked about earlier, or this is more a priority for you, then going over these retirement accounts can definitely help, right? So what are the common options? The SEP IRA. I'm sure you heard of it. If you're a small business, if you haven't heard about SEP IRA, if your account is not working, hasn't discussed this with you, you need to go back to them and ask. The solo 401ks, normal 401k, the traditional 401k, the traditional IRAs, and the simple IRAs. Okay, these are all options that are available to you that you can definitely utilize before year end. Okay, now prepaying certain expenses is another one. Okay, because if cash flows allows, you can start prepaying stuff, right? Because usually the way that taxes work is you can go through the cash basis. Okay, so anything that you prepaid, although in a financial gap, it's not something that has been earned or has been incurred yet, you can put it on your taxes. Okay, so we're talking about maybe prepaying some rent, insurance, supplies, subscriptions. You can pay ahead of time, and you can get that deduction this year rather than waiting for next. Okay, and another one is the big one. It's home office deduction. Okay, so this is one that I speak to my clients a lot about. This is one that during the COVID was probably the number one conversations that you had, right? It was a time when we were all sent home to work from our homes, and it just became popular subject, right? Hey, what do I get to deduct? I'm working from home now. So this is obviously things have changed a little bit since then. People are going back to the office, as in, in general, right? Some people are still working from home, and that's great. But they for the vast majority of people, usually a lot of the large companies, especially, they're requiring for you to go back to the office. So, but the home office deduction is still an option. There's still a lot of rules you gotta follow and make sure that you do it right. But that's key, right? Do it before year end. Make sure you're doing this right. Make sure you're either using the standard or you're doing the square mileage in whatever the space is, and make sure that your space looks like an office. Okay, and then the mileage, right? Work through your mileage. How many miles have you used this year? Are you using the standard deduction? Are you doing the direct expense? Can I add? Is there a business trip that I've put off that I go ahead and take, looking at my deductions? So this is the sort of analysis that you want to do before year end that is really going to help you. So number 5, review payroll and your reasonable compensation. Okay, very, very popular subject of discussion with my clients, right? Especially those S-Corps and 1065 forms, filings for partnerships. Okay, so how am I compensating myself? Am I doing this right? What's the percentage? Do I do 40? Do I do 50? Do I do 60? So, there is no one silver bullet answer for this. These all depends, right? I've seen a bunch of videos out there of people tell, it's this exact formula. And I can disprove that with you right off the bat. There is no one percentage that fits for everybody. This is something that you want to walk through. You want to talk with your accountant. You want to explain the whole situation, how you've been paid, what your net income is. Does it even make sense to be an S-Corp? All of those things are important that you discuss it with your accountant, that you ask the right questions. Your CPA should be the one asking and being proactive with you. But things happen. If that's not happening, you should definitely go in and ask the right questions. But so what is the S-Corp? What is this? What is the reasonable compensation? This is like where you kind of gotta follow the IRS code. That if you're an S-Corp, for example, you have to have payroll. You do have to pay yourself through that compensation. So this is where, does it even make sense to have an S-Corp if you don't have enough to to pay payroll, then it may not be necessary for you to be an S-Corp. But it has to be a reasonable wage, right? So the question is, what is reasonable, right? What might be reasonable to me might not be reasonable to you. But here, what's important here is that it's a salary that makes sense based on your circumstances versus based on your numbers, based on your industry. You have to take the whole picture. So this is where you analyze, you make that decision, possibly even thinking about maybe making a year-end a bonus payment for yourself, maybe for your team, or doing a year-end distribution might be something that makes sense, right? Another thing that you could do at this time is make some adjustments, right? Have I been paying myself too much, and now I'm at a loss? This is the type of analysis that you want to do before year end. Okay. So number 6, checklist item number 6, the charitable contributions. Okay. So this is where you kind of go and you follow your heart, but also your wallet, right? Because it's there are a bunch of good charitable places out there that you can go in and go make a difference, right? Whatever situation you might be in, whatever your interest might be, where you might want to make promote some change or something that you're passionate about, making a charitable contribution might work for you. But the important here is that you do have a time limit. You have until December 31st to make that decision. So if there's something you kind of thinking about, you're bouncing some ideas, I would advise that you think about it a little bit harder and make that decision, right away. Make sure you do it right. I'm going to give you a few tips on this one. Okay, so there is a cash distribution and there's a non-cash distribution, contributions that you can make for these charitable places, right? Like a gift. Okay, so you gotta walk through that and see which one is more convenient for you. It all depends, right, on what type of cash flow you're looking at. What type of business are you? Are you a seasonal? You have over cash for a long? You have some cash that you can work with for a while that you may not need. So all these things you need to walk through to make that determination. Important is when you're making these contributions, make sure that you save receipts. Right, very important. You need to, usually, like as part of these transactions, you get some sort of receipt from the charitable donations that you from the place that you're giving it to, right? It's usually part of the process. So make sure you follow that correctly. Okay. You also need to understand the documentation rules. You need to know how long do I need to keep the receipts? Where do I need to keep the receipts? Is it just a banking transaction? Does that work? Just to show you that a wire was done. Or just to show that some cash was taken to make that contribution. So you need to make sure you following this correctly. Okay. So it feels good to give, but you do have to do it right to make sure that it's a win-win. Okay. Now let's get to checklist item number 7, which is major life changes. Right. So this is the part of where, did anything change during the year that maybe to you it wasn't a big deal, but, you need to inform your accountant, right? So what is this? What is this, right? So did you get married? Did you get divorced? Did you have kids? Did you set up a new business? Did you purchase a home? Did you sell a home? Did you have some real estate investments? Did you change jobs? Did you get an inheritance? Did you have large medical expenses? These are all items that you need to talk to your accountant before December 31st, because it's important. All of these things, how they might have an impact on your taxes, right? So, obviously, if you already got married, if you already got divorced, that's something that already happened. But if you plan if you put all those situations, if you kind of put them, if you put it in front of you as part of the whole tax planning and the tax advisory that you want before year end, it gives you opportunity to get ahead and make some decisions, right? You can't change if you get an inheritance, right? But you can adapt to that situation and make sure that you make the right choices from there on before year end to make sure that you don't get surprises at the end of the year. Because at the end, that's what you want to avoid, right? Number one is to avoid surprises, and then have to go outside of your comfort zone, or go out of your daily routine to have to even maybe possibly get a loan or sell an asset to pay for taxes, right? That's something that nobody wants, right? So that's basically it. That's your checklist. I kind of gave you a rundown of each, kind of walk you through what you need to do. And the goal here, as I said, cannot emphasize this enough, is if you don't have a CPA, if you only talk to a CPA in March, you deserve better guidance. You need to really get the help that you need, okay? It's gonna really fall into that kind of routine. I call it a trap, but let's just keep the conversation positive. Let's say to that habit or routine where it's like in December, you kind of want to focus on the holidays. You don't, taxes is something you don't want to deal with. But it's just gonna be more expensive to wait, especially if you got changes, if you got business, if you got stuff that you want to do, which is, usually it's the stuff that you want to do also to help you save, right? If you just stay idle and you don't do anything, you're also probably already, taking advantage of certain even deductions that you can do, of opportunities that you could do just because you don't want to do anything, right? So I always encourage my business owners, my entrepreneurs, to just think outside the box, right? To think, don't just stay idle just because you don't know what to do, because there's a ton of opportunities, right? And following this checklist is really gonna put you on a spot before year end where you're gonna make smart decisions, where you're gonna see where, okay, just because I did this right, I was able to save money, right? So this is the type of conversation that you want to have with your CPA, so you can see the value of using a CPA, right? So here, just give me an example, right? In our firm, we do year-end planning, right? We go through this whole checklist. We work with you. We look at your whole situation and make sure that you're seeing you're spot on, where you're going, where you're doing things right in a way that you're right in the sense that you plan things correctly, and that the way that you thought you were gonna have your books or your situation, that is actually accurate, right? That, for example, if you come to me and you say, well, I've been making $40,000 a year in revenue for the last 3 years. We go through this checklist and we make sure that's right? Make sure that there are no surprises, okay? So if you want some help, I'm gonna offer my link below, so you can contact us for a discovery, a free consultation, or if you want some tax advice specifically, we offer some assistance with that as well. And my advice is, if you don't have to contact me, there are plenty of CPAs there that can help you, so that you don't miss out. And in December is the right time to do it. So thanks again for watching this. If you like this video, hit the like button and follow us, and see you the next time.